it was for the press to the bottom edge on the S&P, but there's obviously a reason why there was a press to the bottom edge for the S&P. We can recognize that there was this value that hadn't developed. As the price rallied on the S&P into these areas here, we started to recognize that the value was still divergent on this uptick. I was able to recognize in the background that the value was divergent and it was getting sticky on the buy side of the markets. Because it was getting sticky, they were obviously trying to bring in buyers. And they were successful. Massive amounts of buyers came in. And every single one of those buyers starting to get trapped into that little block there. Do you see it? I mean, that's incredible. That is incredible how badly those buyers overpaid for that position. Massively overpaid for that position. And obviously all we did was take advantage of them, not by selling into their buying, because that buying might be successful. But when does that buying stop becoming successful? When I started to see a little bit of selling coming in the book, when I started to see that the agreement on how sticky it was now being supported by the stack coming in the offer. And because the stack starts to come in the offer, I think it should be very, very straightforward now to take my shot at the downside of the move. I took my shot at the downside of the move. Remember, the one thing about this, Andy, is one of the challenges is it's not straightforward. It's not just if one line's going up and one line's going down, that means this or that means that. That's probably you're looking at it more from a systematic approach, where it's got to have a rule base. Unfortunately, order flow is not specifically rule-based. It's situation-based. It's what's happening in the background. What are they trying to accomplish? Because there's a whole stack of different things that can be happening. The market can get very slippy to try and get sellers to come in at bottom edges. So in other words, the market looks really slippy on the sell side, but yet that's a buy trade. So it depends what we're trying to accomplish. It depends what the market's trying to accomplish. It depends what the book's trying to accomplish. So, when you see a situation happening, and you start seeing that this is starting to diverge from the deltas and from the book, it doesn't necessarily mean that that's bearish. It could be that they're opening the book to try and bring in the sellers, and they're slipping the price through by pulling away bids. Well, we see that when the market has a big upside candle or a big downside candle. So we get a big downside candle, that type of thing happens. But we'll cover this in Classroom, Andy, to see if we can get to the bottom of the idea. But the key to this is it's not systematic. It's not going to be systematic. It is a situational thing. Order flow is situational, but we'll go through some of those situations so that we understand, and we'll obviously just paint out what those situations should have in those examples. And then we'll look for them. Simple as that, we'll look for them, see if we can come up with some examples. I didn't think the S&P had much selling at the bottom edge. It looks like on the face of it as if we're correct. The value at the volatility guys are still divergent at the lows. We suggested that you pay attention to this price here at 407.26, yeah? And you can see that at the low price, we still have that divergence in terms of these volatilities. We still have that divergence, and yes, it came off that 407.20s that we suggested quite nicely. Quite a nice little buy side reversal off those bottom edge prices.